The US economy contracted by an annualized 0.3% over Q1 2025 as imports rose 41% to beat tariffs, which dragged down the GDP print. The fall in the reading, the first since 2022, was worse than forecasts for an increase of a weak 0.4% growth and well below the 2.4% rise for Q4 2024. The United States preferred Fed inflation metric, that's the core personal consumption expenditures price index, was unchanged in March, lower than expected after advancing 0.5% in February. Year on year through March, core PCE prices increased 2.6% as expected after rising 3.0% in February. The CME Fed Watch tool showed after the inflation data higher odds of more than 325 basis points cuts by the Fed in 2025. It also helped to reduce the sell-off on Wall Street. The US and Ukraine yesterday signed an economic partnership giving Washington access to critical minerals. The deal sets up a reconstruction investment fund for Ukraine as a way to repay America for past aid. Hello and welcome to Global Business Insights, where we look closer at headlines moving markets to equip viewers with perspectives to help them thrive in today's business environment. In this special edition, our focus is on Microsoft's latest earnings release. Satya Nadella, CEO of Microsoft, yesterday said that cloud and AI are the essential inputs for every business to expand output, reduce costs, and accelerate growth, while Amy Hood, CFO, called it a very strong quarter. We show some clips from the videocast on Microsoft performance. In a later episode, we will analyze what you are learning from the major tech firms on the broad business climate.
It was a record quarter driven by continued strength of Microsoft Cloud, which surpassed $42 billion in revenue, up 22% in constant currency. Cloud and AI are the essential inputs for every business to expand output, reduce costs, and accelerate growth. Now I'll highlight examples starting with infrastructure. We continue to expand our data center capacity. This quarter alone, we opened DCs in 10 countries across 4 continents. Model capabilities are doubling in performance every 6 months thanks to multiple compounding scaling laws. We continue to optimize and drive efficiencies across every layer, from DC design to hardware and silicon to system software to model optimization, all towards lowering costs and increasing performance. You see this in our supply chain, where we have reduced dock to lead times for new GPUs by nearly 20%, across our blended fleet, where we have increased AI performance by nearly 30% ISO power, and our cost per token, which is more than halved. When it comes to cloud migrations, we saw accelerating demand with customers in every industry, from Abercrombie and Fitch to Coca-Cola and ServiceNow, expanding their footprints on Azure. And we remain the cloud of choice for customers' mission-critical VMware, SAP, and Oracle workloads, with more regional availability than any other hyperscaler. We're also excited about the next frontier in cloud systems with quantum. In addition to putting our quantum stack on machines from our partners, we're also making real progress on a path to a utility-scale quantum computer with the introduction of Majorana 1. When it comes to data and analytics, we have deeply integrated our AI platform with our data stack. PostgreSQL usage accelerated for the 3rd consecutive quarter, and it is now used by nearly 60% of the Fortune 500, including companies like BMW and BNY Mellon. In closing, we are rapidly innovating to expand our opportunity across both consumer and commercial businesses. In just a few weeks at our Build conference, we'll share how we are creating the most powerful AI platform for developers, and I encourage you to tune in. With that, let me turn it over to Amy.
Thank you, Satya, and good afternoon, everyone. This quarter, revenue was $70.1 billion, up 13% and 15% in constant currency. Gross margin dollars increased 11% and 13% in constant currency, while operating income increased 16% and 19% in constant currency. and earnings per share was $3.46, an increase of 18% and 19% in constant currency. Results exceeded expectations driven by focused execution from our sales and partner teams. We continue to see strong demand for our cloud and AI offerings as they help customers drive productivity, increase efficiencies, and grow their businesses. And again this quarter, revenue from our AI business was above expectations. Commercial bookings increased 18% and 17% in constant currency, significantly ahead of expectations again this quarter, driven by an Azure commitment from OpenAI. We also saw consistent execution across our core annuity sales motions and continued long-term commitments to our platform. Commercial remaining performance obligation increased to $315 billion, up 34% and 33% in constant currency. Roughly 40% will be recognized in revenue in the next 12 months, up 17% year over year. The remaining portion, recognized beyond the next 12 months, increased 47%. And this quarter, our annuity mix was 98%. FX was roughly in line with expectations on total company revenue, segment-level revenue, and operating expense growth. FX decreased COGS growth by only 1 point unfavorable to expectations. Microsoft Cloud revenue was $42.4 billion, ahead of expectations, and grew 20% and 22% in constant currency. Microsoft Cloud gross margin percentage was 69%, in line with expectations, and decreased 3 points year over year, driven by the impact of scaling our AI infrastructure. Company gross margin percentage was also 69%, down 1 point year over year, driven by scaling our AI infrastructure. Operating expenses increased 2% and 3% in constant currency, lower than expected due to our focus on cost efficiencies, as well as investments that shifted to Q4. Operating margins increased 1 point year over year to 46%, better than expected, as we continue to focus on building high-performing teams and increasing our agility by reducing layers with fewer managers. At a total company level, headcount at the end of March was 2% higher than a year ago and was down slightly compared to last quarter. Now to our segment results. Revenue from productivity and business processes was $29.9 billion and grew 10% and 13% in constant currency, ahead of expectations, driven by LinkedIn, Microsoft 365 commercial products, and Microsoft 365 consumer. M365 commercial cloud revenue increased 12% and 15% in constant currency, in line with expectations. ARPU growth was again driven by E5 and M365 Copilot. With M365 Copilot, we continue to see growth across customer segments and geos. Paid M365 commercial seats grew 7% year over year to over 430 million. While we continue to see installed base expansion across all customer segments, growth was primarily driven by our small and medium business and frontline worker offerings. M365 commercial products revenue increased 5% and 8% in constant currency, ahead of expectations due to higher than expected Office transactional purchasing. M365 consumer cloud revenue increased 10% and 12% in constant currency, ahead of expectations, driven by higher than expected subscription growth following the January price increase. M365 consumer subscriptions grew 9% to 87.7 million. LinkedIn revenue increased 7% and 8% in constant currency. Results were ahead of expectations due to better than expected performance across all businesses. The Talent Solutions business continues to be impacted by weakness in the hiring market. Dynamics 365 revenue increased 16% and 18% in constant currency, in line with expectations, with continued growth across all workloads. Segment gross margin dollars increased 10% and 13% in constant currency, and gross margin percentage was relatively unchanged year over year, even with the impact of scaling our AI infrastructure. Operating expenses increased 1% and 2% in constant currency, and operating income increased 15% and 18% in constant currency. Next, the Intelligent Cloud segment. Revenue was $26.8 billion and grew 21% and 22% in constant currency, ahead of expectations, driven by Azure. In Azure and other cloud services, revenue grew 33% and 35% in constant currency, including 16 points from AI services. focused execution drove non-AI services results, where we saw accelerated growth in our enterprise customer segment, as well as some improvement in our scale motions. And in Azure AI services, we brought capacity online faster than expected. In our on-premises server business, revenue decreased 6% and 4% in constant currency, slightly below expectations, driven by renewals with lower in-period revenue recognition from the mix of contracts. The year-over-year decline is reflective of the continued customer shift to cloud offerings. Enterprise and partner services revenue increased 5% and 6% in constant currency, slightly ahead of expectations, due to better-than-expected performance in enterprise support services. Segment gross margin dollars increased 13% and 14% in constant currency, and gross margin percentage decreased 4 points year-over-year, driven by scaling our AI infrastructure. Operating expenses increased 6% and 7% in constant currency, and operating income grew 17% and 18% in constant currency. Now to more personal computing. Revenue was $13.4 billion and grew 6% and 7% in constant currency, ahead of expectations due to better-than-expected results across all businesses. Windows OEM and devices revenue increased 3% year-over-year, ahead of expectations, as tariff uncertainty through the quarter resulted in inventory levels that remained elevated. Search and news advertising revenue ex-TAC increased 21% and 23% in constant currency. Results were significantly ahead of expectations, driven by usage from a third-party partnership, better than expected rate expansion, and volume growth across Edge and Bing. And in gaming, revenue increased 5% and 6% in constant currency. Xbox content and services revenue increased 8% and 9% in constant currency, ahead of expectations, driven by stronger than expected performance in third-party and first-party content. Segment gross margin dollars increased 9% and 11% in constant currency. Gross margin percentage increased 2 points year-over-year, driven by strong execution on margin improvement in search and gaming. Operating expenses increased 1%. Operating income increased 21% and 23% in constant currency, driven by continued prioritization of higher margin opportunities.
More business headlines. In Nigeria, Zenith Bank reported Q1 2025 with quarterly interest income up a record 71% year-on-year to 837.64 billion naira. This also led to post-tax profits surging 20.7% to 311.8 billion naira. Meta also posted strong results. Revenue rose 16% year-on-year to $42.31 billion, higher than the expected $41.4 billion. Earnings per share rose 35% to $6.43 per share, also ahead of forecasts. Advertising revenue, which is 98% of total sales, was in at $41.39 billion, again beating expectation. CEO Meta, Mark Zuckerberg, said it was making good progress on its AI glasses and Meta AI. Following the announcement, Meta stocks rose 7% after the closing bell. A U.S. district judge yesterday said Apple ignored an injunction tied to issues from a 2021 trial in which Epic Games had sued Apple on antitrust grounds. Both Apple and Amazon will report on their Q1 2025 results later today. Most Asia-Pacific markets, including India, shut for Labor Day. The Nikkei, that's the Japanese index, traded higher as the Bank of Japan kept interest rates steady and sharply cut its growth forecasts today, suggesting uncertainty. Both S&P and the Dow are riding their longest winning streak since last year. Wall Street futures also positive today, helped by low inflation and higher odds for Fed rate cuts, also as Meta and Microsoft posted earning beats. Oil futures fell for a third day, with OPEC Plus expected to lift production when it meets to discuss June output levels. Well, that's all on this special edition of Global Business Insights. Bye-bye.